NVIDIA Corporation, NASDAQ NVDA, has seen a positive revision in its stock price target, with Mizuho raising its objective from $170 to $185, indicating a potential upside of over 16% from its current price. This upgrade comes amidst a broader consensus among analysts, with a significant majority maintaining a buy or strong buy rating on the stock. NVIDIA's recent quarterly earnings report revealed a 69.2% increase in revenue year-over-year, although earnings per share (EPS) of 81 cents slightly missed the consensus estimate of 87 cents. The company continues to demonstrate robust financial health, evidenced by its high return on equity of 105.09% and a net margin of 51.69%. The stock's performance is further buoyed by institutional confidence, with significant activity from hedge funds and institutional investors. Over 65% of NVIDIA's stock is held by institutional investors, reflecting strong market trust in its growth trajectory. Recent insider trading activity, including sales by CEO Jen-Hsun Huang and Director Tench Cox, has not dampened market sentiment. NVIDIA's strategic focus on gaming GPUs, enterprise graphics, and metaverse applications positions it well in the tech sector, aligning with the increasing demand for advanced computing and networking solutions globally. The company's market cap now stands at $3.89 trillion, underscoring its significant impact and presence in the tech industry.
AutoZone NYSE AZO has received a significant boost in its stock price target from Mizuho, with the target increased from $3,740 to $4,050, suggesting a potential upside of 10.44% from its current price. This adjustment follows a series of positive evaluations from other firms, including Guggenheim and Raymond James Financial, which have also shown confidence in AutoZone's performance by increasing their price objectives and maintaining strong buy ratings. The consensus among analysts, based on data from MarketBeat.com, is a buy rating with an average price target of $4,087. Despite missing its earnings estimates in the last quarter, reporting $35.36 earnings per share against the expected $37.07, AutoZone's revenue increased by 5.4% year-over-year, reaching $4.46 billion. The company's robust market presence and strategic positioning in the automotive parts industry, especially across the United States, Mexico, and Brazil, have contributed to steady investor confidence. Institutional investors and hedge funds hold a significant 92.74% of the stock, indicating strong institutional backing. The company's stock performance, with a market capitalization of $61.53 billion and a low beta of 0.39, suggests relative stability and moderate volatility, appealing to investors seeking consistent returns in the retail automotive sector.
i-80 Gold Corp. (ZIAU) saw its shares rise by 3.4% during midday trading, reaching C90 cents. Despite a significant 81% drop in trading volume compared to its average, this price movement follows an upgrade from Cormark, which shifted its rating from hold to moderate buy. The company's stock has been subject to varying analyst opinions, with a consensus rating of moderate buy and a target price of $1.88, suggesting potential upside. The company, focused on Nevada-based mining operations, aims to become a mid-tier gold producer. It plans to achieve this through the development of multiple mining sites feeding into its Lone Tree complex. Despite a challenging financial position indicated by a negative P/E ratio of -1.66 and a debt-to-equity ratio of 40.07, i-80 Gold is pursuing a disciplined growth strategy. This approach is designed to minimize risks while seeking growth opportunities, positioning the company for potential future gains in the gold mining sector.
Aviva plc's LON AV stock experienced a 1.7% increase during Friday's trading session, reaching a high of GBX 616.20, $8.41 before closing at the same price. This performance comes amidst a broader context of the company's solid financial health, indicated by a quick ratio of 1.57 and a current ratio of 2.93, suggesting strong liquidity. Aviva's market capitalization stands at £16.48 billion, with a P/E ratio of 12.64, reflecting a moderate valuation relative to earnings, and a beta of 0.89, indicating lower volatility compared to the broader market. The company's stock has been trending upwards, with its 50-day and 200-day simple moving averages at GBX 599.61 and GBX 541.92, respectively. Aviva operates in the insurance and financial services sectors, offering products ranging from life insurance to retirement savings across the UK, Ireland, Canada, and internationally. The recent uptick in share price may reflect investor confidence in Aviva's diversified product offerings and financial stability. However, with a PEG ratio of 2.01, there may be concerns about growth potential relative to its earnings. Investors are advised to consider these factors alongside broader market conditions when evaluating Aviva's stock as a potential buy.
Brookfield Reinsurance Limited, NYSE BNRE, experienced a notable 2.5% increase in its stock price, reaching as high as $64.22 during trading on Friday, before settling at $64.18. This movement occurred despite a 7% decline in trading volume, compared to its average, indicating a potential shift in investor sentiment or strategic interest. With a market capitalization of $9.34 billion and a high price-to-earnings P/E ratio of 221.32, the stock's valuation suggests that investors are pricing in significant future growth or profitability improvements. The company's beta of 1.53 indicates higher volatility compared to the broader market, which may appeal to investors seeking higher risk-reward opportunities. Brookfield Reinsurance operates across direct insurance, reinsurance, and pension risk transfer (PRT) segments, offering a broad range of insurance and financial products. This diversification allows the company to mitigate risks associated with any single line of business and capitalize on growth opportunities in various markets. The recent price performance, alongside its moving averages, suggests a positive trend, potentially driven by strategic developments or market conditions favorable to its operations. Investors should consider these dynamics along with the company's financial metrics when evaluating the stock's potential as an investment.
Sumco Corporation, OTCMKTS, SUMCF, a key player in the semiconductor industry, has experienced a notable 7.6% increase in its share price, reaching a high of $8.40. This surge in Sumco's stock price comes despite a significant drop in trading volume, with only 902 shares exchanged compared to the average daily volume of 4,811 shares. The company's stock has shown a steady upward trend, with its 50-day and 200-day moving averages standing at $7.18 and $7.28, respectively. This positive movement indicates growing investor confidence, possibly driven by the company's strategic positioning in the global semiconductor market, which covers major regions such as Japan, the United States, and China. Sumco specializes in manufacturing silicon wafers, a critical component in semiconductor production, supplying various types of wafers including monocrystalline ingots and silicon-on-insulator products. The rise in share price could reflect broader market optimism about the semiconductor sector, which is essential for numerous technological applications and industries. As demand for semiconductors continues to grow globally, driven by emerging technologies and increased digitalization, companies like Sumco are well positioned to benefit. Investors should consider these factors, alongside market trends and potential risks, when evaluating Sumco's stock as a potential investment.
UBS Group has raised its price target for Constellation brands, NYSE, from $195 to $205, maintaining a buy rating on the stock. This adjustment suggests an 18.76% potential upside from the company's current trading price. The revised target reflects UBS Group's confidence in the company's future performance. Despite recent mixed analyst reviews, other analysts have diverged in their assessments, with Citigroup and Morgan Stanley lowering their price objectives due to concerns over Constellation's recent earnings performance, which showed a decline in revenue and earnings per share compared to last year. Constellation Brands recently reported an earnings miss, posting $3.22 EPS against the expected $3.45, and a 5.5% drop in revenue year over year. Despite these figures, The company maintains a robust market presence with a diverse portfolio of popular beer brands, including Corona and Modelo. The stock's performance is underpinned by a strong return on equity of 31.41%, though its negative net margin of 4.11% and high debt-to-equity ratio of 1.30 may pose risks. Institutional investors remain engaged, with significant stakes held by hedge funds and other large entities, indicating sustained confidence in the company's long-term prospects.
JPMorgan Chase & Company has revised its price target for Constellation Brands, NYSE, STZ, increasing it from $170 to $182. Indicating a potential upside of 5.44% from the stock's previous close. Despite this upward revision, the brokerage maintains a neutral rating on the stock. This adjustment comes amidst a series of target price reductions from other firms, including D.A. Davidson, Jefferies Financial Group, Royal Bank of Canada, Roth Capital, and BMO Capital Markets, reflecting varying levels of optimism about the company's future performance. The consensus among analysts, as reported by MarketBeat, is a moderate buy, with an average target price of $213.35. Constellation Brands recently reported quarterly earnings that fell short of expectations, with earnings per share, EPS, of $3.22 compared to the anticipated $3.45, and revenue of $2.52 billion, slightly below estimates of $2.57 billion. The company experienced a 5.5% decline in quarterly revenue year over year, with a negative net margin of 4.11%, though it maintained a strong return on equity at 31.41%. Despite these challenges, institutional investors continue to show interest, with significant ownership by hedge funds and other institutional entities. Constellation Brands remains a key player in the beverage industry, known for its popular beer brands like Corona and Modelo, and its performance and strategic moves will be closely watched by investors.
Mizuho has raised its price target for Supermicro NASDAQ, SMCI, from $40 to $47 while maintaining a neutral rating, suggesting a potential downside of 3.10% from its last closing price. This adjustment comes amid a wave of mixed analyst ratings for the company, with Wedbush and Needham & Company LLC maintaining a buy stance, while Goldman Sachs downgraded it to a sell with a reduced target of $32. The average analyst rating for Supermicro stands at hold, with a consensus price target of $46.06, reflecting diverse opinions on the stock's future performance. Supermicro's recent financial performance has shown resilience, with a 19.5% year-over-year increase in quarterly revenue. Although earnings per share (EPS) slightly surpassed expectations by just 1 cent, the company's financial health is underscored by a solid quick ratio of 3.95 and a current ratio of 6.66, indicating robust liquidity. Despite insider selling activities, including significant transactions by CEO Charles Liang and CFO David E. Wigand, institutional investors hold a substantial 84.06% stake in the company, signaling continued confidence in its long-term prospects. The updated price target and mixed analyst ratings highlight the market's cautious optimism about Supermicro's future, amid its strong market position in high-performance server and storage solutions. The diverse analyst outlooks and insider trading activities could influence market sentiment and investor strategies as stakeholders assess the company's growth trajectory and financial stability.
Progress Software Corporation, NASDAQ, PRGS, has received a positive earnings forecast from Wedbush, which has raised its FY 2025 earnings per share estimate to $4.22, slightly up from the previous $4.21. This adjustment comes alongside maintaining an outperform rating and a $75 price target on the stock. The consensus estimate for the company's current full-year earnings stands at $4.01 per share. Additionally, Wedbush projects Q4 2025 earnings at $1.04 EPS. Other analysts have varied stances, with Wall Street Zen downgrading the stock from a strong buy to a buy, while Guggenheim and D.A. Davidson have issued buy ratings with target prices of $83 and $75, respectively. The stock is currently rated as a moderate buy, with an average target price of $75.17 according to MarketBeat. Progress Software has shown strong performance in its latest quarterly earnings, reporting $1.40 EPS, surpassing the consensus estimate of $1.30. the company's revenue for the quarter reached $237.36 million, slightly above expectations, marking a 35.6% increase from the same period last year. Despite a high debt-to-equity ratio of 2.43, the company boasts a robust return on equity of 43.72% and a net margin of 6.63%. The stock's recent performance includes a slight increase of 0.4%, opening at $54.14 on NASDAQ. Institutional investors have been active, with Swedbank AB notably increasing its holdings by 65.8% in the first quarter, highlighting continued investor interest and confidence in the company's growth trajectory.